Good morning. Good morning, everybody. And this is Don. We can only be here for about an hour today and going to be pretty skimpy this week. We got a lot of folks rolling into Q schools. So we're going to be very, very busy. We hope you are off to a great start. And we might wait a few minutes and see if a few folks that were here on Friday come back to visit us. Great. It worked out that way. We were talking about what it takes to be a trend trader and to be prepared psychologically to stay in the trend and not be reacting to money. And so we'll be back in a few minutes. Be sure if you get any questions, let us know. We punch up like this to create awareness, not to hand out the fish, and and to answer any questions that you might have. We're talking about one trade. The one trade from Friday that we held overnight had a overnight high water mark of 24,500. We took it off into the open at 16,002. We now have a small one on here. We'll see if we can take it back. If we had traded, if I had let the trade, the machine would have done just fine. Let me kind of show everybody here. Let me see if I can open this up here. And we'll come here to strategy performance report. Here it is. So this is no, not for the week. Let's see here for the daily, probably the week. Um, she would have made 1226. She would have made 3,500 last night. She would have made 5,000 overnight. So she would have made 8,500. We did twice that. So that's a beautiful thing. I also want to open up if I can. I'm having some issues with our desktops. Don't know what's going on here, but let me see if I can get eyes on our option. Now, we put in some options on, and now we won't. I didn't put on a full complement of options on Thursday and Friday, but we did put some on, but not what I would consider a full position. But I'm not going to add to them now. I mean, we got them on. They should be doing just fine, but I'm not going to add to them now because the implied volatility has just gone through the roof here, and I don't want to overpay. So I can tell you in a minute, everything stays up here. So we put on an option, um, if you recall, and we'll repeat this. We put on an option. It was either Thursday or Friday. It cost, we put on a 6090, a 6090 put for March 21. The cost of that option was 10,300, basically 10,290 to be exact. We could, I'm not going to, we could close that option today and realize a $5,000 profit. So we're having a nice run here, but I'm not going to close that option. And we have um, others as well. What we will do is, since it's all the way out to March, now this might be, don't know, we were expecting that maybe this correction would start in earnest in March, but it might be starting now. Maybe it's going to be a correction that ends in March. Don't know. But if we do get some vicious technical daily rallies against our short options, we'll come in with short dated options, 10 days, 2 weeks, something like that, and hedge them. We'll go long against the shorts, right? We're going to try to stay short. We really do think that the bigger money is going to be on the dark side. We'll see. We'll see though, right? So, any case, let me close down some desktops so we don't overload things. And but again, just to let everybody know, we won't be able to punch up much. Going forward, it's just we can't maintain. I can't maintain a YouTube schedule. Just can't. We got too many things going on, and and what's happening is, we're trying to. I say on the one hand, we're not trying to prove anything, we're trying to demonstrate, but honestly, there are people coming by and they have a very, very short attention span and they want to see what they want to see. So, when we're running strategies that are trending, those strategies can take, hours and hours for them to play out. Now, if you want to be a counter trender and want something shorter, we can demonstrate that too, for an hour or so. So, we'll probably be doing something like, the middle of the week, maybe a Wednesday or something. I'm not sure. Try to punch up for an hour and show folks that are passing by what that is. But these trending strategies, we were with the strategy, if you recall, on last week we were running the 5 minute, Thursday and Friday, was it maybe Wednesday and Thursday? It ground up. It didn't do squat, right? It just didn't do anything. The market wasn't doing anything. And then on Friday, it did okay, but the hourly, if you remember, let's go to the hourly here. Let's just change this to the hourly. We looked at the hourly, and I think it'll be here because it was. We looked at this on Friday, and yeah, there it is. It was 3 p.m. on Friday, right? And there's the 12 grand. It was up more than that. And that gave us certainly the impetus and the courage to hold this thing overnight. It didn't really take much courage. You know, we we've been saying both on YouTube and to our members that, if you're not going to short now, the end of last week, I mean, you're probably never going to get short. I mean, um, and what did they do? They take it down over the weekend, at the open, catch everybody asleep, and boom, and now anybody who didn't get short now, the risk is if you don't have the tool set, that you get your head ripped off, coming back the other way, which is what could have happened this morning. People could have, oh, I'm going to get in there now, and they got ripped off 200-300 points because this actually made this from here to here this morning. This was a buy that made 5,000 there. That was the $5,000 trade. 5,000. So somebody got short, early in the morning, think I'm going to jump on the back of this thing. Entries matter, critically important. If it lies, it dies, or if it flies, if it flies, it dies. Eh, it's a start. Burn it. Yeah, the dry some pretty dry kindling out there in these markets, right? We were talking about that. And good to see everybody. We wanted to punch up just to kind of complete the loop here. For those of you that were coming by, we may repeat this a couple of times because, and you can go back and listen to if you choose to, we won't be, but um, the 5 minute cut it. Yep, yeah, it did. And, but we took it out, earlier, right? So the, yep. So this is the summary, right? We want to give you a real time summary. So we're trading the 5 minute. Remember, I think it was just from memory here. I don't have my score sheet in front of me, but I know Thursday was a grinder, right? The market didn't do shit. And I think even part of Wednesday. And then Friday we got on a nice trade. Remember we had like about I think it was about a 1700 drawdown. And then on Friday we cleaned up the drawdown, and we may have been up like $300 or $400, or may have been down $300 or $400. And I was having the conversation with everybody on Friday of what it means to understand the difference between a counter trend and a trend, and how important it is if you have a trending strategy, that it's got to be one you have confidence in, but so that has to be learned over time. But if you have confidence in your trending strategy, you have to be prepared. In this particular trending strategy, the strategy told us that we're going to be losing 7 out of 10 times, 7 out of 10 times, right? So you have to know that, right? So if you put a high value on winning, you got to win 8 or 9 out of 10 times, then you're going to struggle with the strategy because it's just you're going to be uncomfortable. Um, so on Friday, we have modest profits. But what we saw, there were a number of things that we saw, but we'll just come here. We looked at the 60 minute, if you recall. In the 60 minute was going short at 3 o'clock on Friday afternoon. That's when that was. And we're looking and saying, geez, the dailies, remember the date we went and looked at the daily VIX, and the daily VIX is, down in here, overly calm. We looked at the daily NASDAQ futures, and they were just coming out of euphoria, the daily. We looked at the skew, and the skew was giving us a reading of 172, 173. We're saying, hey, the big money, they are really, really spooked here. They are getting puts on in a big way. Remember that conversation? So I said, what we're going to do is, and I will do this not every weekend, but in situations like this, where I was totally comfortable, I said, you know what, we'll just sit on it. We don't know what's going to happen over the weekend. As it turned out, nothing happened over the weekend of anything, at least any headline. But come Sunday night, ba boom, and that's kind of classic. They a lot of times the market won't give people an opportunity to get in, but particularly they don't like giving them an opportunity to get out. So we stayed on the trade overnight, certainly last night. That one trade from Friday that we put on the 5 minute had a run up of 24,500. 24,500. We closed it this morning for 16,232. You can see over here, the machine closed it here last night I think it was for about a $5,000 profit, and then wouldn't have been in any of this. And then the machine, when everyone else was probably getting short this morning and getting short in what we call the hole, the machine actually went long here and made another 5,000. Now we weren't in that trade. And but and so I showed everybody this. Let me just go here and show you the performance report for just so here is the trade from last night. Last night was 3,500, and here is the trade this morning, 5,000. That's what the machine did. We can see on the weekly basis. So on a weekly basis, it's done 8,500. But We've done 16 too, and we're on it again. So, you know, that's just, the way that it played out. Um, the challenge here is I can't conduct Q schools every day for YouTube. I'm not going to do that. It's too much work. I don't think about what we're doing, and we can't be doing it, and we're not doing it really on YouTube. But the challenge is that when we punch up a strategy on YouTube and it's a trending strategy, I know, our members know, maybe Jay Storts knows, maybe if it flies, it dies knows. You guys know, because we've said it a million times and you've seen it play out, that, hey, this is a trending strategy. There might be a few hours where it grinds and doesn't do much. There might even be an entire day that it does that. That might be. You guys might know it. But what we're getting is we're getting emails and phone calls from people that they're driving by. Oh, I don't work. Yeah, that sucks. And giving it that type of thing. And so it's kind of like, you know what? You know, um, I don't know. It may be a little counterproductive. But regardless, we have a lot of folks going into Q, and we don't have the time, even the screen time, computer time, to be punching up for the hours that we did, for instance, over the last 3 to 4 weeks. Just nowhere close. I started the first of the year, I'm thinking, well, but we just don't. It's so going forward, we're going to do the best we can. Probably this is, set everybody's expectations, push the notification buttons. Again, why we do the YouTube is just to create awareness so that if folks want to join or want to learn, that's the purpose behind it. So we'll probably need to reduce that to sometime in the middle part of the week, probably punching up for an hour. And what I'll do is it's easy enough, um, is punch up a strategy that, will give us, 5 or 6 trades in an hour, and we make, a few $100 or whatever. But this is really a for those that saw it and experienced it, an extremely valuable lesson to you. Forget about the money, right? Because you'll never, if you're constantly, reacting and going after the money, going after the money, going after the win rate, going after the win rate, and you have the patience of a gnat, you're never going to get that. You're never going to get a trade that pays you 16 to 20 grand. Now, I didn't, I didn't even, expect that either. But on Friday, I was describing this before things, played out. And I said, and I was using the example. I said, we know from the model, we know from the model that the average winning trade is 2,000. So, I want to get that. And we had that on Friday, but I'd like to be in position to maybe get a positive outlier, maybe 4,000, maybe 6,000, which is where even the profit target was. So, but sometimes, when you go over a weekend like that, or you go overnight, sometimes you can be really rewarded. So we want positive outliers and not negative outliers. Now, someone who doesn't know what they don't know might say, well, Don, you could have done that. And over the weekend, it could have gapped up and you would have been down, 13 grand or 16 grand. No, no, there wasn't. The chances of that happening were so remote based on all the technicals we saw, extremely remote. I mean, you know, um, that I would have taken that, and we did, right? So we took this position overnight, but we also, I don't know, I'm losing, I think it was Thursday, but we placed option contracts on the S&P, remember? And we did it at 6,000 on the S&P cash, 6,090, nearly 6,100. And we put those put contracts out to March 21. Now, those put contracts cost. Now, I like to do spreads, but I really felt very, very strongly. We share this with our members. I try not to because they got to make their own decisions, and I'm not trying to, um, I'm not trying to get in anybody's head, but I'm trying also, like, guys, this is, and we were picking up on what we call false highs on the market, false lows on the VIX. We had divergence on the VIX down low. We had divergence on the markets. We had a high skew. I mean, we had all the ingredients for a big ass fire. And it was just a question of when, it was close. And I think I even said on Thursday, Friday, I'm like, it's only going to be a few days. It could be later today, meaning Friday. It could be, early next week, but it's getting close. And now what we don't know is this just going to be a brush fire and going to be, watered out? And by the way, the feds can do this, right? They got the equivalent of those big airplanes and scoop up the water and just, throw down some flame retardant. There is something called the plunge protection team. By the way, I should put this back to a 1 minute. Something called the plunge protection team. And I got to tell you, Trump's new Secretary of Treasury, the dude's a traitor. He is. And so could they come in and drop a whole shitload of liquidity? And do they have their friends in high places with tons and tons of billions of dollars? And absolutely they could. So we never know. We never know. But it could be, it could also be the start of one hell of a conflagration here. And maybe, there's another school of thought, right? This gets into the area of why and narratives and you know we don't trade on any of it, right? I mean, but it could be that Trump wants to see this thing, let's clean it out, let's brush, burn it down for a little bit, and then we'll bring it back and take credit for it. And maybe, do they have that kind of control? I don't know. Somebody asked last night, a gentleman asked, I'm not sure who he was from, he's like, why is the market down 200? I don't know. I don't know. Let's go make something up, I mean, that's what the producers on the fake media, and they'll go make something up. So a really good lesson. We don't ask really why. It is. It just is. What we need to be able to do is to act. And it takes time, it takes energy, it takes capital, it takes energy to do that. And if you do your homework and you are prepared and you have the tools, when you act, you will be rewarded with a payout. Maybe not every single time, but do a couple of these in a month, takes a lot of heat off, covers up a lot of sins. So somebody may have driven by on Wednesday and, oh man, that guy, he sucks, man. I watched him for 6 hours on Wednesday and he lost $1,500, Martha. I'm joking, right? But we kind of get that feeling sometimes, not from you guys that are here, hopefully not, but sometimes we do. They send me emails and stuff, and then call, right? Very nice gentleman, and I pointed this out, nice gentleman, and and he's going to see this and say, oh, no, wait a minute, and his question was, I have about 20 to $25,000 in capital, trading capital, and I want to make 40 to 50,000 a month. And I told him that ain't gonna happen. I mean, he doesn't know what he doesn't know. He hasn't really been trading. He's been trading some options for 14 months. He hasn't done anything there. So I don't know why he thinks that he could roll into futures and make 40 grand. I'm not about to, fuel his bubble. I'm gonna be real. I'm like, no, not gonna happen. Now, if he punches up or a person punches up on YouTube and says, geez, that was one trade. He made 16 grand, Martha. Yeah, but I know I'm probably not going to get another one of those this week. We might. I mean, I never anything's possible, but but we're not banking on it, right? And I want those positive outliers. So, in any case, going forward, definitely push the notification buttons. Thank you. We appreciate the like buttons. reach out to us. Q School is getting busy, busy, busy. And we book these things weeks and months out. So if it is something you want to do and you got a time frame, um, Jay so maybe laughing about the 40, only 40 to 50 a month. Okay. All right. That's just no problem. Do you see Dave Portnoy, by the way? Oh, Davey. Davey day trader, Davey the gambler. There's a classic case of a guy. He's a nice guy. He's probably a fun guy to watch a football game with and everything else. But there's a guy that, you know, you don't equate money with smarts. By the way, he's a little younger than me. He grew up um in the town right next door to me. He's from Swampscott, Massachusetts, little rich town. And I'm originally from Lynn, Massachusetts. Lynn, the city of sin. You do not come out the way you go in. And we were crosstown rivals. They actually had a decent little football team. I got to give them that. But any case, they were um, they were the rich kids. So Davies was not quite as rich as he was. He put $500,000 on Trump coin. He turned it into 1 million. So, and he showed the ticket, I guess. So I guess, and then he took the million and he put it on Buffalo, and that didn't play out so good. And he was never gonna watch another NFL. If you saw the memes, they're never gonna watch the NFL again. Never gonna, bet on. Why would you do that? God Almighty! I'm sorry if you guys like the NFL. I mean, I would rather, and we were having more fun here doing that. But it did look, I mean, it is. I mean, he's bemoaning the fact that the NFL is behind the Chiefs, and I tend to agree. But whatever. I'm not a NFLer at all. Um, easy come, easy go. 1 million. Incredible. We're not gambling here. We're not. We're traders. So we're gonna try to. We came into this one here. We're going to try to watch that 1 minute and see if we can get another 5 minute down. And if we can roll down here in the time that we're here, now it may be later today. We're only going to be able to stay up until maybe about 12:30 or so. But we might just yet, if we can get back down to 20,763, you can do the math there, but we might pick up another 8 or 9 grand on that. And that would be a nice finish, right? All about profit factor too, right? All about profit factor. So any questions, let us know. But if you go back to Friday afternoon, I was trying to, the more important thing is, wasn't trying to demonstrate an outcome, but I was trying to describe the difference between counter trend trading, the difference between trend trading, how the payouts are different, how the winning percentages are different, and how you, as a trader, must be aware of that and be able to throttle and adjust your emotions. That's what I was trying to describe. Because if you're not aware of that and you haven't been through it, what can happen is it's just like going, I would think about this, if you go up into an airplane and the engine stalls or starts to flutter, you know um if you have, and I can't be with everybody, we are together, during Q school, but if you have a co-pilot beside you and he says, hey, student pilot, don't worry about it, man. You're okay. It's just a little flutter, right? I mean, we're okay. Or if the engine stalls out, hey, we're okay. Now we're going to go into a spin. We're going to do this. We're going to do that, whatever. And, we're okay. And we're going to, you know, get to where we want to go. But if you don't have that and you're just up there flying around and you get yourself into some shit, um, you might put the plane in the ground. You might crash your account. and we don't want to see anybody do that. There's no reason to do it. I hope that makes sense a little bit. And I think what I said was, I think so on the options that we have that are out now to, we got some at the end of February, some into March, out to March 21. They're on the dark side. They're on the dark side. Now, I think this is still early. I'm not saying, we might just go sideways here for the rest of today. And but if we are going to get into some sort of little mini sustained rally, um, and I begin to think about closing those puts, what I might reserve as an option, what I can do is don't go out as far, go like for a week or 10 days and get some calls and hedge them so I can try to stay in the bigger trade, right? Because I'd like those things to pay out, right? If we get a 10% correction, if we get a 10% correction from where I am, if we get it, those puts will pay out 60,000 a piece. It'll make this 16,000 like chump change. I'd like to do that. But you don't get the setup. You don't get the setup that we have like every day. It takes weeks to get a market, or for a market to set up. And when it does set up, you got to have the skill set. You got to have the tools. Say, this is it. This is it. And this is why. And then you begin to, and that's why it's so important, even the nightly videos, even for our annual members, because our annual members, you're really not that far away from being a very successful, intraday trader. It doesn't take that long. Shouldn't. However, to see the market do what it's capable of doing, it really, and hear me out on this. I'm not talking about being a successful trader or a successful intraday, so I'm not trying to discourage anybody. But in order to see what a market is capable of doing, you're going to need at least 5 to 6 years. And in this case, this bull run since '08 has been going on for like 14 years. So there are professional, so-called professional money managers, kids in my book, that, and maybe you haven't seen what a market is capable of doing on the dark side. You haven't been through that. I've been through quite a few of them. I've been through quite a few, and I'm not saying that this is going to be it. Yeah, this is the big one, like Sanford and Sons. We're like, this is the big one. This is the hard. This is the one that's going to get me. Um, you know, for the past 14, 15 years, the market is littered with people that have said that. There are times when it sets up and you say, hey, it might be. This is one of them, might be, but it may not as well. So, and I did say, even last week, we say all the time, it isn't possible. It is impossible for the market to move through our tools and not see it real time what it's doing. It isn't possible. Now, what is the challenge is sometimes believing your lying eyes, either on the upside or the downside. It's just like, I can't believe it's doing what it's doing. you know, and including me. Let's go look now. Remember the ES Rinko? Let's go look at it. Hey Ted, no, we're not. No, we're not going yet. All right, let's take a look at this. All right, so you'll remember this. Let me bring this down into view here. This is now look what it says up here. You can barely see it. It says you might favor the short side and distribution underway. The machine has done that. This is the S&P. So last week I drew this out And this is the sort of thing that you're going to see on your monthly memberships, right? But I'm not going to do this every day for you on YouTube. That wouldn't be fair, but I am going to do it today again. And let me show you what this looks like. All right. So this is, let's see. I think this is the election. Let me get the dates in here. This is that's November. No, so it's even back here. So the election was back here. And we got that rally up here. So then we pull back, we got another rally. So we got quite a few in here, but we were up here last week on the S&P. Remember, so we were doing this was over a period of time here. So we were legging down. We'll just pick one here. We're legging down. They're the ABC structures. We're legging down. Now we come back up. And maybe you're in a bearish tone. This is where people make a mistake. And it's fine to have gotten short. Maybe somebody got short in here. But when we came back up and we certainly got above that, they should have covered. And if they didn't cover there, they got an opportunity to cover here. And that was, if they didn't do it, that was the mistake. Then we get the C point, and now we're off. They certainly should not have been short. You can see it. And now we go. So we were up here last week. And what did we say as we were doing this? Well, we might get over this and we might get over that. And guess what? We might even get right up to that. And it would be normal. It would be normal if we pull back. And I said, if we pull back, it would be normal that we pause right here at right around 60.57. And I said, and ideally, I would have liked to have seen the market do this, not challenge the high, and then break and break hard. But it didn't do that, did it? Nope. Nope. It came in here last night with a vengeance and just said, I'm not saying this to anybody here, but it said to the bulls, fuck you. Down she comes, and she blew that out. So there's no more. Now we will be buying intraday, but the daily swing trader should not be buying anymore, in my view. You've taken that out. The regime is now down. And so then what do we do this morning? The public comes in, oh man, I got to get in on this. There's a fire. There's time to short the market. We're crashing. I'm going to short. And they short and they get the head ripped off. Just in that little move. I mean, this is thousands of dollars here. But what do? We counter back up. Now, nobody's a soothsayer. We could get back above this. I don't think we will, but we could. And why do I say that? Because we came back so hard and so fast and we took this out. So it would be very abnormal for this thing to reclaim that. It would be very abnormal. And then what's going to happen is, I think, even later today, we might slide back down. And then right in here, then we're going to make the run. And we're going to make the run to right here. And those puts that I got on are going to be, because not only am I going to have, hundreds of points in them, um, the implied volatility will spike. And if we break this, if we do, now the normal thing would be for it to bounce, but if we do, then all hell will break loose. But what happens is nobody wants to short up here with me. Our members do. Nobody wanted to do that. They want to short down here or down here. They buy the highs. They buy at the highs, the breakouts, and they short the lows. And they get their head ripped off. Now, I don't want to give back too much here, so we should slide back to our little, because I don't have the program running. Oops, what did I just do? Let's put that back up. And let's go take a peek at our little tool here. So we're turning a little back up. So I got to Watch this a little. We don't want to give too much back. And yeah, so she's trying to, even the 5 minutes trying to run back up. I'm not gonna play it on the long side. I'll sit on this here a little bit. And but you want to get intimate with not just one market. We always show the NQ here because most people are most interested in the NQ, and that's why we do it. But it's optimum to have 5 to 7 markets that you're intimate with, and ideally, one, two, or three strategies that you're very, very comfortable with, and then have the equity and have your time, and define and control the things that you can define and control. And the market is not one of them. And asking yourself, gentleman came in last night, it's classic first thing, and he may be here, and I mean no insult, but his first question was, um, why is the market down 200? Now, as a trader, he's going to struggle, right? Um, if he continues to do that. If you continue to look, and you'll find an answer to suit you, but it'll do you no good in the long term. It just won't. I mean, because it might be right, it might be wrong, and it's nothing that can be repeated. Oh, the market went down because Trump pissed off Colombia. Oh, the market went down because whatever. Well, what's that going to do for you in the future? Trump piss off Mexico, the market might rally. Who the hell knows? And I don't think any of that. I mean, it's just, you know, it's the fake media. It's just a distraction. My office is very quiet, with the exception of Ted and Abby, and we just doing our thing. There are 20, 24 trading days in a month, and then they're down to 20. You have one day, one in trading a mini. Now, if you traded a micro, you'd be up 1600. If you had traded 10 minis, you're up 160,000. Um, but if you don't have any trading experience and you are over leveraging a small account, the likelihood that you're going to make 160,000 and hold it and hold the ground and hold the ground, that's Dave Portnoy shit, the gambler, is slim and none. And you're going to be all chewed up, and you'll be drinking and smoking weed and everything else to relax. You'll be way, way too stressed. There's no reason for it. And, if you can, and you might have one or two markets that, you have one that, punches up like this, then you have a couple of others that do it, and next thing you know, you're off and running. You're doing your thing. I hope that makes sense. I'm going to shut up. I'm going to let you watch. And if we take any trades, I'll let you know. And we did videotape overnight, and so later today you'll see we'll compress hours and hours of trading time down to a couple of minutes. But even during the Q school, we can give you the education, we can give you the tools, we can, there's so much more, right? There's so much more. This isn't like the only thing, right? It gets easier and easier, right? We're trying to lay that out. But I can't give you confidence. That I can't give anybody. And how do you get confidence? By doing, successfully by doing. That's the case in anything in life. You learn something, you apply it, it works, you repeat it, you do it over and over again. And the next thing you know, whatever that something is, you become really confident. And the next thing you know, you're not even thinking about what you're doing. It's like brushing your teeth. So this chart that we're looking at is the 5 minute in queue on Swing Machine, right? That's what it is. But I also like having the 1 minute. So if the 1 minute goes long, and I choose I want to come out, I can, right? So right now we're back on in the 5 minute now, just confirm short again here, and we're right back on it again. I don't know if it's going to get no, so we're right back. And now my head is not clouded with a big sell off. It's this, it's that. Doesn't matter. I just want to get from ideally from here to here. And if I do, I could, make another 8 grand, maybe, right? But I got to play, and keep my eyes on the radar and don't get, don't get excited. Don't you ever see these really good lawyers, in a courtroom? You always sometimes marvel like how can they not get either nervous or angry or really pissed off? So, I mean, sometimes they do, but most of the time they don't. They got a courtroom demeanor about them, you know. You want to have that, right? And if you're hanging out in these trading rooms with Discord and everything else, and everyone's high-fiving and they're doing that, I, you might be better off getting out of there. Get away from that, you know. That's football game bullshit, you know. Go to the football game and share and everything else, but not here. I think you want to just be, you know, have a good demeanor, trading demeanor. Let's see what we do here. We can also push a button and let's go look at the other markets while we're here. We know what we got here. I got visibility on it. So we don't see the 1 minute here. Here's the 5 minutes. We'll keep an eye here and see if that trend can reestablish. Notice the Dow, right? The Dow is up. Why is the Dow up? Because it's safe refuge, right? When they are coming out of the risky assets, the growth assets, a lot of times they will go into the Dow stocks, the Walmarts, the J&Js. I think they're part of the Dow. And the reason why is it makes sense because a lot of them, a lot of these hedge funds, mutual funds, by their charter, by their very charter, they have to remain invested. They can't just go to cash. They have to be in the market. So that's what they will do. They'll move their money into a safe harbor. They're not looking to get a return on their money. They're looking to get a return of their money. So when I see the Dow up, I don't interpret that to mean, oh, wow, market's still really strong. No, to the contrary, it tells me the market is defensive. So we see the VIX is also on a 5 minute is elevated, and we can certainly see the S&P. She's down there, so we got over 100 points in that those options or more. So that's a beautiful thing. I don't need to go look at them. Now the gold futures are getting hit. Silver's getting hit. Oil's getting hit. Bitcoin's getting whacked in Ethereum. My guess is, and see what'll happen is if we get a really good correction, and I'm thinking we will because that skew is so damn high. They don't want to buy puts themselves. Those hedge funds and stuff, they don't want to do that. And if they don't do it, then the pullback is usually shallow. But that skew at 173 was telling us, they're really spooked. They're really, really they're gonna hunker down and they're not gonna come out. There'll be intraday rallies here, and they may even last for 2 or 3 days, but I don't, you know, I still think that they're really concerned about something. And it could be any number of things, probably most importantly, probably interest rates and a recession. But we'll leave that to others. And my guess is I don't have visibility. I could go look on. My guess is the American dollar is probably rallying. Let me go look here, see if I can get a beat on it. Bear with me here. No, the American dollar is not exactly rallying right now at this moment, but I wouldn't be shorting it down here because they'll also go to cash. So some of the stocks that are getting, wow, this is really remarkable too. Let me just show you for those that like to trade, the stocks. Um, let's go look at this. I'm going to show you a couple of other things here with these tools. So more opportunity and more ways to trade than you presumably have money for. So here is the Pebble Beach radar. And here are the trades. The biggest one here is Broadcom. She's down 39 points. She's up 15. This is a 10. This is based on $10,000. You could be trading, options here, but that's a 15%, 14%. These are all these. So how many? Let me scroll down here, show you that gap down, maybe on earnings too. But we'll scroll down. How many and look at we got some longs here, and so I'd be really interested in the longs because the market is getting beat up. So you got some relative strength here on these stocks, but there are a total of about 34, 35 signals, and we're profitable in all but three. That's pretty damn good. Real time. Real time. Let's go to the option trade. And now we showed you this on Friday. We did. Here's the options club selector. And if you remember, now there's going to be probably more, but on Friday, there were only two stocks on the long side. And that's when we place our trades at the end of the day. There were only two. But over here, there was a ton of short stuff. And let's scroll down and see what we see. See the little phantom vignettes? What I mean by that is that this is a phantom vignette. It was there and now it isn't. Why? Because the stock is down $6 or $7. Well, if you had bought a put there on Friday, you'd be pretty happy today. So it shows us that it was there, but it ain't there anymore. Look at them all. Well, they've come in. Okay, so she just triggered a stop loss there. So I might, I don't have it automated. I'm doing it by hand. So let me go in here and take a peek. Bear with me. I want to get waylaid here. I'm not going long. That I'm not going to do that today. I wouldn't do that at all today. Just keep taking. So the 5 minute. Now, if you are watching this with a super critical eye, which is fine, you should, can, you may see this is hard coded. There's a hard coded rotation to this signal. It's technically still short. That's what this is, but you're seeing a dip. And it's a little bit at odds. And there is the short. It's still short. I'm like, well, wait a minute, Don. Well, we go through this in the Q school. right? In detail. It takes us a couple of days to walk through this. What's happening is the program is very, very good. 800 lines of code. It we describe it like a bicycle. Um, what would you call it? A sprocket, like a bicycle sprocket. And during normal markets, during normal days, um, for the most part, it will function very smoothly. But during periods of very fast activity, namely people throwing in market orders, the smaller the time frame in this, if we see it, it's usually at the 1 minute. Very unusual for us to see it at the 5 minute. But let's face it, today's, we're 6 to 700 points down. So what happens is when they start throwing in market orders, um, it we describe it as such. There's nothing wrong with the code. There's nothing wrong with the program, but it's kind of like missing a sprocket, you know, on your bicycle. And it is what it is. And so you have to be prepared, and we show everybody what that is, what it looks like, and how to kind of trade through it if it happens. But it isn't a fault of the code. It's just that the code is hard coded and the market is not, and the people or other machines are just blowing through, and dropping hundreds of contracts around us, in a smaller time frame. It could appear to miss a sprocket, if that makes sense. But 90% of the time it's or higher, it's no big deal as long as you know. So we just mentioned it, those coming through. You're like, wait a minute, wait, it's red light. So we don't trade this, red light to green light, or red rover, we're flying this way, flying that. We don't issue. If you've been watching us do this. Okay, what I was showing there, I think my mic was off. And I'm sorry about that. I was talking about the skew, but where was I? Um, I think my mic was off, but I was showing you the Pebble Beach. I think the mic was on at that point, but I was also trying to show the skew. And the skew is what really, was cautioning us, right? Not that. That's the yield curve. Here's the skew. So the skew is giving us a 173. And this was on Friday, right? This was back up here. We were saying up in here, so we're not trying to, if anyone has an expectation that they're going to be, especially on a daily basis, you're going to know what's going to happen tomorrow. That's not realistic. That isn't. So when we're going overnight, we're going to use options. And we always say, if there's a choice, use less margin, less leverage, and get yourself plenty of time. We do zero DTEs, but I don't think that that's going to be what you want to be doing day in and day out. If you want to really make some nice money, with options, you got to get in the habit of going out 35, 45 days and just relax and, do some fishing, play some golf, play with the kids, just relax and don't be watching your money every minute of every day on these option contracts. Um, but but that really was the one of the tells, right? Um, so and we were showing the Pebble Beach with all of its and all the option trades. I mean, there's just a ton of stuff here. But and here's that S&P. So going to be very, very important today that she do not close above right here, 60-60. And if she doesn't, which I don't think she's going to, if she doesn't, we want to leg down. We're going to get a red sell dot. You could certainly pick up, statistically, pretty easy to pick up another grand. So we're going to sit tight on this. But if we come down later today would be beautiful, and we take this area out, then we're going to leg. We're going to leg and we're going to go to here. And then those of you that like to use Fibonacci's, I mean, you can do this with fibs if you want. There's nothing magical about fibs. There isn't. But it does give you something reliable or credible to look at Fibonacci price extension. So we can grab this, and what we can do is we can play this leg, or we can play even from here. This could be kind of interesting. So let's do it this way. So we're going to go up to here. No, I'm sorry. And then, no, that's not right. Back it off. Back it off. Sorry. That's not what I want to do. I mean, you could do it that way if you think, but see, the leg up is not going to happen in our view now because we took out that swing. So, if we just pulled to here, then yes, we could do that. And it held and started to go. Like if this was happening right here, then we say, hey, you know what? This thing might be running up. But because we took that out, we don't think so. So we're more inclined to think that, let me go get these again. I want Fibonacci price extension. I drew it wrong. Price extension lines. And so we take it from here, A to B, and if we can reject it right here, if we can, this gives us an idea that the 100% extension would be down around here, which is where that swing is. And maybe I should color her. Well, I'll just make it thicker so you can see it. And we'll make it red. So that's where we think we could be going, somewhere's in here. And if this area doesn't hold, like tonight or tomorrow, this bitch could really break out really hard. That's what it is. So it's decision time here for a lot of these hedge funds. And I think they've already decided, took them months. See, it takes a hedge fund to build into positions. It takes them about 90 days to get in. It takes them about 90 days to get out. They can't turn their whole portfolios around in a day. It takes them a long time. And the power brokers and the treasurer and everything, they're there to help them, not you or me. We can trade around this, which is a huge advantage, right? Huge advantage. And of course, this is just the intraday, and we're leaning on the short side. Um, it's kind of a no-brainer. Elevated VIX, I think it's best that we wait to even try on the long side. Okay, folks, it is 12:30. Um, I am going to set a break-even stop on this, and this will be my last trade of the day here. Um, Let me go do this, and you're going to see the little asterisk show up. So you're going to know the worst that bag is going to do for the day is 16. I'm going to set it for $100. So the worst I'm going to do is 16,332 for the day. That works. And that'll be it. Now, but I'm going to put myself in position, and if we revisit the lows there that were established there in the wee hours, then we're going to tack on another 8 grand or so, six to 8 grand. Um, Let me get this set up. I'm going to use the matrix here. I'm not going to use the strategy right now. It's just easier. I can just come in and do this with a matrix order. I'm going to try to do this, right? So, and I'm going to set, I'm short, and I'm just going to set a buy stop at $100. So that's all I'm going to buy stop. So if she comes back from where she is and I only make another 100, then I'll be at 16,332 at the end of the day. If all hell breaks loose, I'll have eyes on it. I'll be doing other things, and we'll see if we can punch it out. I want to thank you for coming by, and I did want to follow it up. I didn't expect to actually be punching up on YouTube, but I wanted to finish kind of what we saw last week, and it was good that you saw that for those of you that were there to experience and see it. Unfortunately, it takes a lot of time, right? And 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 I'm saying that not about the YouTube thing. I'm even saying that about your if you potentially come into the Q school. Because you might come into Q school when volatility is rocking and rolling and flying around, and that's what you experience. And then you finish Q school, and I can tell you, well, when during periods of low volatility, you're going to have to make adjustments, but you're going to have to make adjustments, and you're going to have to be able to recognize that. Now we're putting that out at night, saying, hey guys, the volatility is in, you've got to, but you have to experience that. And even going from, we've been in a bullish phase since 2008, right? It's really 2009, March of 2009. The market has been, up and away, and people don't want to let go of that. And they don't understand and they don't appreciate what a bear market is. A bear market is much, much more debilitating. I mean, normally they last for about 18 months, but we've had this bull that's lasted how many years? 10, 14 years, whatever it is. And so we could have a bear market that could last 5 or 6 years. We could. And now you'll get vicious rallies within the bear and fool a bunch of people, but it'll be really, really debilitating to people. And then they'll find out who's swimming naked, who has game and who doesn't have game. We love bear markets because there's a lot of money to be made on both sides of the ball. There really are. And what does RIP mean, Ryan? Yes, very important. So that gets into Let me just kind of quickly show. Great question. I'm going to answer it, but I'm also going to give you a little bit more. And we'll end with this because it's really a great place. There are only four ways to trade. We can do this. And what is that? Trend follow long. Follow the trend. TFL. Trend follow long. And it's hard to write with a mouse. The characteristics of trend following are what? You make the most, that's supposed to be dollar sign, the most amount of money. The most amount of money. The challenges to trend following is they're infrequent. Infrequent. That don't happen a lot. I think part of the problem is this pencil's too thick. Let me change it. Um, that don't happen a lot. The other part is the win-loss ratio. If you are trend following, the win-loss ratio is 30 to 50%. This is underestimated and this is not appreciated by most. They just don't know. And I spend a lot of time trying to explain this because if you're following a trend, as we saw on Thursday, Friday, 7 out of 10 times you're going to lose. And if a person is coming by on YouTube and doesn't understand and appreciate this, and they see like 3 or 4 trades in a row, they're like, "Oh man, that crap don't work. I'm leaving." And they just blow by. They just don't even know. And the problem is they never learn because they don't know, they don't appreciate that. And they think that I need to win 7, 8, or 9 out of 10 times to make money. That's not right. Mhm. But so that's important. However, we can also have this. What's that? That is a trend follow short. Oh, that's easy, Don. That's all I want to do. Yep. And the same characteristics. $4 signs, four of them, right? Lots of money, 16 grand. They're infrequent. So you gotta be really patient. Even we have hourly signals. You might say, I'm going to follow the hourly signal on Swing Machine. That'd be all right. But we've had hourly signals last for 2 weeks. Do you have the patience? Susan does. Susan absolutely does. Incredible patience. And the win ratio is 30 to 50%. But that's the win rate. But think of the loss rate. That means that 5 to 7 out of 10 times you're going to lose. Most normal or new public traders don't appreciate that and not going to do it. So Ryan's asked, well, what's a rip? Well, what's this? What is this? This is a dip. This is a dip. This is a dip, or otherwise known as counter trend short. And what are you supposed to do when you're trending up? Right? Buy the dip, buy the dip, buy the dip, right? So ideally, when you're going long, you're trying to, and that's what the machine is trying to do. You're trying to, anyways, on a trend, you're trying to get in here, right? Should have done this first. You're trying to get in here. You're trying to get in here, and that's what you're trying to do. But there's somebody else out there that's the counter trender. And and that's okay. And I put myself sometimes in this category. He's got the attention span of a gnat. And he wants to make money and he wants to do it over and over and over again and get the hell out of here. So what does he do? He shorts. He shorts, and I'll change my pencil here to red. And he thinks that's the top, and I'm going to short here, and I'm going to get out right here. And I make a little bit of money counter trend shorting. and he does it again here, and he does it here, and he does it here, and he does it here. Very, very important that he execute flawlessly, absolutely flawlessly. Because if he doesn't, or she, they will get carried out to sea. They'll be short and they will lose 16 grand or 15 grand or 5 grand. Well, it'll come back and they don't know what they're doing. The counter trend shorter, what is seductive about the counter trend is this. I'll keep it in red, counter trend short. They only make if they're good, they're only making a little bit of money. However, it's frequent. I'll just put an F here. Frequent. They happen a lot more. And the win-loss ratio is 70 to 80%. It's very high. So they get a lot of positive reinforcement. And if you're a person that likes to get that pat on the back at work, you did good, you did good, you did good, then you could be seduced by counter trending the shorts because you're trying to get that positive reinforcement. Of course, if you're not executing properly, you're going to get a crack on the ass. Now, what Ryan asked was, well, what's the rip? Well, the rip is just the other side. And the rip is this going up. Those are rips. The counter trend long person, I'll do it in yellow, counter trend long is coming in here and he's buying here. I'll put this in green. So the trend is down, but he's trying to pick a bottom and he's coming in here and he's executing and he's coming in here and he's executing. Same thing. He better be flawless because he could risk getting killed. Same characteristics here. So it's a counter trend long, makes okay money. It's frequent. That's an F for frequent, and it's 70 to 80% of the time. So all we can do is make you aware of this. And that's what the machinery is programmed and built around. There's only 4 ways to trade here. There's only 4 ways. And there's a couple of things about this. By the way, buying the dip, when the trend is going up and the market is hitting new high after new high after new high, it doesn't really matter why you bought, right? Because everybody's a genius. You could have bought the peaks, you could have bought the lows, if it's making new high, everyone's a genius. That's when you should get spooked, right? Same thing like with when Bitcoin's making high after high after high, everybody who owns Bitcoin is a genius, but we know everyone isn't. Instinctively. Same thing. Over here, these are by the dips. When you're going down, you want to sell the rips. The problem is that most people are buying and they see everything as a dip. So they get over here, we're going down, and they don't see the trend changing. They get vertigo. And what do? They buy the dip, thinking it's a new trend, and they get killed. They buy the dip. So all the money they made over here, they give back and then some over here. The pros on Wall Street, I use the term loosely, they call these things fish hooks. Fish hooks. They gaff you. So they say when a stock is going down, oh, honey, or sweetie, your broker calls you and, we need to buy, I don't know, Tesla at 200. Nah, I don't think so. Oh, it just went on sale. We can buy it at 150. Okay, let's buy it at 150. You know what? We can buy more Tesla at 100 and a quarter. Oh, we can buy more Tesla at 50, as an example. And they just keep buying and averaging down. Those are fish hooks. So how do you trade? So what do you trade and how do you trade? And the problem is everyone says, oh, I trend follow, but they really don't know the interval. And then they get into the trend, and what do? They cut it off. They cut it off. So, if we got into the trend and we stayed, proportionately, I mean, it would have been okay. I mean, on Friday we could have made $500, but we wouldn't have made the 16 grand if we had got out. right? Now I was talking on Friday, even before I didn't know I was going to make 16 grand, but I said, hey, I think we got a shot to make 4 or 5 grand. The average winning trade is 2 grand. So I think, I think we could. But so you've got to know that information in advance, got to know what you're trading. You got to know and define your interval. You've got to, have all that understood in advance. Because if you're trying to trend trade and you come in and counter it or you keep cutting it off, what happens is you eat like a bird and you shit like an elephant. And just and what happens is you're constantly making decisions based on the money. And so you make some money and then you lose some money and you get back to even and then you lose some money, then you're down and then, and it's just this like death spiral. And they know this, but there's another little catch to this, right? Because this is a market that's going up, this is a market that's going down. But what does the market do most of the time? What does it do? It goes sideways. And we get a market that's this doesn't trend as it did on Wednesday and Thursday. And you want the trend. You want to make that money. And you're really angry or you're really frustrated and you get really impatient and you make mistakes. Or you give up on getting the trend. Wow, I'll just make my couple $100. I'll just make my couple hundred. Maybe it's 1,000. I'll make my 1,000. I'll make my 500. Okay, if that's what you want to do. And then she breaks trend and you're not in it. Oh, I'm so frustrated. Well, that's because, a person's making decisions that they may not understand it. They may understand it, but then don't have the right tools to see it and then don't know how to manage it. We get the computer to do it, but you still have to interact in with the computer, and fly the plane. Pilots call, listening to your inner ear. They say that JFK could have saved himself if he just hit a switch and put the plane into autopilot and the plane would have leveled itself off and then he could have radioed for help. But he was in a state of absolute horror and panic and he went in the ocean at, 500 miles an hour, God forbid, right? There are some people whose accounts did that this morning and they're probably really, really worried. And they should be worried because they're flying, without any expertise. And they may be listening to people with no expertise. I can't do this for 30 or, these brokers and brokers got hundreds of clients. They can't do this for them. Are you kidding me? They're not going to do that. They don't have time for it. They don't have a setup for it. Their companies won't allow them to do it. The only person that's going to do this sort of thing for you is you. That's why we always say that the Holy Grail isn't any one program, it's you with all your preconceived notions and everything else. And that can be a lot of stuff to get over. But that is the difference between a rip and a dip in brief. Um, and it is an expectation game. And now the other piece is this is on a time chart. What about point and figure? What about price charts? What are those done? That's a whole nother way of looking at the price action. I did not know that was available. I know that. I know that. The brokerages, in fairness, they don't really have time to teach it either. It takes time. We have members that say that, the Q school should be longer than 3 weeks. It probably should be, but we're doing the best we can, but it needs to be 3. And you need to have TradeStation. We need to be able to have these conversations and be able to get the tools in your hands, and we need to be able to see, you need to be able to see what you can do. Otherwise, you won't have any of this, and you're just going to be buying and selling, selling and buying. Because the brokerages, they will give an account to anyone who's got money and anyone who can fog a mirror. And anyone who can do that can open up something and say, hey, I'm a trader and I'm a this, I'm a that, and just put a bunch of lines on a chart, moving averages and stochastics and MACDs, and and do that. And then we don't do that. I mean, I find that like re a ridiculously wasteful sense of time, and I don't want to waste time. I really don't. Um, I love doing this, but I also, whoops, I love maximizing time. And so I hope I answered it. If there's any other question, let me just slide back and see where we are. And now the average payout on the 5 minute is, and it is short. The average payout is about 2 grand. Well, we're actually this one's only got 500, so it's oscillated a couple of times. We'll see if we can get a rundown here. Well, we said at 12:30, so 1 o'clock. 1 o'clock. I've got to break. And you're very welcome, Ryan. It's a great question, right? And it also shows, and I really do say this is that I do think everybody should be skeptical because I am. I'm very skeptical of stuff, you know. I think being skeptical is critical thinking. So I think that's good. There's a difference between being skeptical and cynical, though, right? There is. And so if you're cynical about it, don't call me, don't, you know. But if you're skeptical and you visit the website and you're still skeptical, give me a call and we can chat. And the other thing is you can join for a month. It's $100. You get the videos. You would have seen what the algos were doing all last week. I'm getting text messages and emails from members that are, you know, you know, sitting real, real pretty this morning. Um, I don't know what the market's going to do the next month, but also too, if you join as a monthly, I will give you what we call a hall pass. And you let me know what day. I'll give you a private Zoom link. We'll give you a 1 hour tour, and then you can hang out the rest of the day. And if at the end of the month you're not happy, you know, you can you're out $100. But we have a retention rate of monthlies. Why I say we have a retention rate of monthlies like of 90%. We're very, very rarely do we lose anyone. Annual memberships are for that person that wants to trade intra-day, intra-evening. In that instance, you don't want to be following anyone. You don't have the time, and they don't either. If you want to be an intraday trader like us, and we think it's a great way to go, you got to have the tools on your desktop. And that's what I even told Susan. That's how all this started. By the way, we've been doing this now for 6 months, now for 6 years. We've been doing this like for 20 plus years, folks, before there was even Twitter. So Stock Market Caddy came about in 2012, but we were doing this in the early 2000s. And as I told Susan, she'd be like, well, I was this. Like Susie, at some point she had all the tools. So I'm like, you know what, kid, you got to do this, right? Because if you don't do it, then I don't really need you doing it. I just do it. So you're like, okay, you know, you got to do it. This is, and it is the motto, learn to trade your game. And, when I go out to play golf, when you go out to play golf, do you want some dude sitting beside you hitting your shots? I don't think so. So why the hell do you want, with your money that you have saved, your retirement, why the hell do you want to give that to I don't want to name the companies or anything, but someone else and have them tell you what to do with your money? And I hear stories that from people who hate to call their broker because he fights with them or they fight with him about when they want to get their cash out and everything else. And why would you want to do that? We don't do that, right? Mm, never have. Now, in the 80s, I've been doing this in the 80s and the 90s, so I'm an older person. I had brokers and brokers. I fired a bunch of them. And Rush Limbaugh had one time he addressed this. And actually, no, I have a friend who works for a hedge fund and met Rush, and Rush, I said, I kind of have a problem giving my money to somebody who has less money than me to manage. Why would I do that? I think if I was smart enough to make the money, I ought to be smart enough at least to keep it and or make it grow. And so these tools would have helped Rush. Love that guy. Would have helped Rush. These tools will help you at minimum to maximize your time, at minimum to help you stay on the right side of the market. Um, am I cynical about the market itself? Do I think the market is rigged? Absolutely. Absolutely. Of course it's rigged. Everything's rigged. But let's just stay on the side that's rigged, right? Let's not be naive. I'm not a naive person. Mm-mm. No. Mm-mm. Um, this platform is TradeStation. That's also another great question. You don't have to have TradeStation to be a monthly member. However, if you're going to go through Q School, you really should have TradeStation. We don't have to have it, but you're going to get much, much more out of it. If your goal is to have these tools on your desktop as an annual member, then you have to have TradeStation. And Ryan, if you are in another part of another part of the world, you need the first step is find out whether or not you can even get it. Some countries won't allow it. And you want to know, do you have the same version that we have here in the States? I hope you do. But some countries don't. And it's changing, so I don't want to say what countries, but some of them are shocking. Even here in the States, there are brokerages that will not allow automated entries. Oh, you're fine. Yeah, you're fine. Texas, you're great. Now, why do we say trade? Now, we've been using TradeStation for over 20 plus years. My background is in surgery. TradeStation, um, they're a wonderful company. They're owned by Mitsubishi Bank. Their platform is superb. It's got areas that we've yet to even explore over 20 years. They just keep adding. It's built by traders. They have wonderful support, wonderful execution, wonderful all of that margin, everything else. Um, they do, but we can really expedite the learning curve and their tools, for instance, a radar screen, this up here that you're seeing. So let's go back and look. Oops, I didn't mean to do that. I just oh, let me see if I put that back, if you don't mind. Um, let's go back here to the radar. So this is radar screen. This is proprietary to TradeStation. They're the only persons that have radar screen. It's a really, really powerful tool. This tool, SMC Swing Machine, is our proprietary program that Susan and I have written that we use, one of 70 programs that goes and works on their platform, right? So that's what, as an example of what you're getting. This program has about 800 lines of code. Does not use moving averages. I know everyone thinks, it's a moving average. It's crazy, but doesn't use moving averages, doesn't use the candles, don't use stochastics and MACDs. We do have programs that will read candles though. And we even have some programs that will read the moving averages, but we don't use them in a big way. We use them in a different way, unique way, really just to keep an eye on the retail crowd. So that was a very simple question, but an insightful question and an important one. Reason being is, and of course, CNBC and the media, everything's a dip, right? So because they want you buying, they want you in, they don't want you selling. They don't. They just want your money. In order to have a market, you got to have, you got to have people in the game, right? You don't want to play poker with a whole bunch of other, really experienced poker players, right? You want the fools. I hate to say it, the suckers, right? You That's what they want. So they want them, buying, the AI stocks or the social media stocks or whatever the hell it is. They just want the money in the game. They're trading hundreds and thousands of these things. Okay. They knew there were people. That's what the skew is telling us. They bought billions and billions and billions of dollars in puts last week, the last 3 weeks on that skew. They made a killing today. They're not losing money. The sheeple are. They're getting croaked because they just buy. And their brokers are, oh, there's another buying opportunity, and then they'll pour more money in. They will continue to do that until they run out of money, and then we'll reset like everything else resets and real estate resets, and and the game goes on. Matthew McConaughey is the parade comes to town. You're right. It's pixie dust, comes, in the movie Wall Street, right? I think it was Wall Street. Um, comes in and flows out. You have to realize there have been people before you. There were people who were in their 60s and 50s and in retirement during the dot-com, and they put all their money into America online, and they lost it all, and they're dead today. There were people in their 50s and 60s or whatever, in the '08, and they bought houses and they bought the housing stocks and they put it in, and they got killed, and they're dead. They're financially dead. They may be really dead. People can make money in bubbles, and you're seeing and hearing about it, but your little radars should be going off in your head. When they stop making ETFs on crypto, you should probably know that the crypto party is over. It's over. And there will be people that will have made millions, but most of the people will lose their ass, and they will be dead financially and otherwise, especially they don't have time. I'll leave you with this. The conversation I had with Susan in the early 2000s was we had seen enough of it. We had done well. We had seen it traditionally. But I got to a point in technology, got to a point, and I said, Susan, this is a scam. This is a joke. One of the things that I couldn't get out of my mind was we're not supposed to be selling, but who is doing all the selling? Why is it we can't sell? Oh, because you can't do that. Oh, okay. You can't time the market. You're not smart enough. You're not this. You're not that. Technology has democratized the markets for better or for worse. It's democratized a lot of things, information, media. Take advantage of it, whatever you do. It is a great time to be alive and a great time to be playing your own game in so many things. Unfortunately, the young people, I'm sorry, but you know, they're not helping them. They're still burying them in college debt, legalizing marijuana, and they're gonna, next thing you know, they're gonna be 40 years old with a bunch of kids with not a pot to hiss in, and and they're gonna say, What do I do now?" I hope that ain't you, but the most successful trader, investor, period, is a guy by the name of Jim Simons, recently passed away, embarrassingly embarrassed Warren Buffett. You probably have never heard of him. Look him up. His videos are there. The most successful investor, trader of all time. Thousands and thousands of percent better than Buffett, admitted by Buffett and Munger. He started in 1981 when he was 41 years old. He was no fool. He was a mathematician. He worked for the NSA, and he was really the godfather of what we call quant trading. He was an intraday trader, folks. So don't snivel your nose by anyone. Make your own, think it through, whatever you do, and find someone that's prepared. If you want to spend 10, 15 grand, you can fly out to Napa Valley with the Nigerians and have a cheese and wine party, and get a signature on a football, and hoot and holler with the pretty girls, and trade a few options. Um, we're not the Nigerians. They seem like very nice guys. and we don't charge that kind of monies. But we work very, very hard to put together these programs. But the most valuable program is the education and then the application thereof. And I can't promise anyone an outcome. I can't. So I thank you. I'll wait a couple of minutes. This trade is locked in. That's the little asterisk up there. So we're guaranteed to make 100. And if she runs on down and revisits here later today, maybe she does, maybe she doesn't. The worst we're going to do is 16,332. Last week was a mild week. This is going to be a very fine week, and it's only Monday. I don't worry about the next week, the week after that. I mean, we've been doing this for years. Any other questions? Let us know. Great question. And in a few short minutes, we're gonna say goodbye now. But if there's any question, I'll answer it, and then we're gonna have to run. And hopefully we can punch up Wednesdays about midday. That's kind of where these live sessions are going to go. It just our schedule on Q Schools is jammed. Thanks. Have fun. Okay, everyone, we're going to say goodbye. We're taping this, right? So at the end of the day, or when we're done with this will probably be the last trade for the today. We will compress the hours of video down to a few minutes, and you'll see where we finished. It'll either be $100 more than where we are realized for the day, or significantly higher. And we wish you the best. We hope you're getting it done. Hope you enjoyed it. And until next time, have fun out there. Stay on your toes. Thanks.